TD Ameritrade's Investor Movement Index is up for the 5th month in a row. And JJ, this is pretty significant, especially in a market just like 2013 where nobody can figure out where the top is. Investors are still buying. Tell us a little about the data this month.
They are, Jill, and it's really amazing. In a month where the S&P 500 was up about 4%, our index was up about 1%. So I like to see that kind of growth in that it shows that people just aren't rushing in. You know, we always talk about frothiness and about the retail investor being the last one in, but what we're seeing is those who are engaging with the market are doing it in a very measured and smart way. And what I mean by a smart way is stocks like GE, Coca-Cola, they got beaten up a little bit on earnings, using that as a buying opportunity rather than the stocks that have already made their move, so to speak.
Well, what I'm happy to hear is whether it's a retail investor or more institutional type traders, they're no longer fighting the tape after 18 months of trying to do so.
After beating their head at it.
Of course, right? Well, your P&L at the end of the day is really what you care about. But what's interesting here is, and it makes for good conversation, it is a stock picker's market, and the numbers are being reflected in the IMX because this isn't an anticipatory product. This is what TD's 6 million accounts are trading.
Right, yeah, it's not just a survey, it's what they actually did. And to exactly what you're talking about, a stock picker's market, you know, one of the things that actually, it almost brings a tear to my eye, it makes me happy, because they talk about retail sellers and buying. What was interesting in this report was actually the selling, because they sold stocks like Caterpillar and Green Mountain Coffee Growers, that it hit 52-week highs. To me, it shows that, again, being a lot more savvy, a lot smarter. The retail investor's gone a long way in being educated. They're starting to trade more like professionals. When stocks at 52-week highs, not necessarily a time to buy, time to take some profits, reconsider your position, maybe look to allocate your capital elsewhere.
And that's why I really enjoyed taking a look at the IMX, because when I saw that they were selling CAT, I pulled up a chart of Eaton CAT, the XLI, which is the industrial ETF, right. And you saw that nice little pop that it had in the last third and fourth week in February. To see that type of buying and selling and taking opportunities off of earnings dips it's really encouraging. The last point I want to make is we're net sellers in Apple. And I find that interesting because it's such a sideways dead money stock, which I can't believe we're saying that, because there's so many other areas in tech which is where you saw that net buying.
Absolutely, and it is funny because Apple is a darling of the retail trader. Let's be honest, Apple, Facebook, those are two stocks, and by the way, they were net buyers of Facebook. I did not mention that earlier, but it's interesting that those stocks are always heavily traded. Now with that again, is there better opportunity elsewhere? People are really, going back to what you said about a stock picker's market, when you have that, people are constantly looking at their allocation and looking for new opportunities elsewhere. It doesn't have to be the sort of darling name of the market to do so.
Okay, great, JJ. Always great to get your insight
Always
for The Street in New York. I'm Jill Malandrino.